recording right now. And then I'll also be turning on closed captioning. So one moment. Okay, there we go. There we go, auto transcription. Okay, so that should be going. Excellent. Well, welcome to our webinar today. We'll be going over the keys to home buying success. So my name is Tatiana Jimenez, and I'm with our marketing team here at Fire Credit Union. So I'll just be going over a few housekeeping items before we get started. So first of all, we want to make sure you are able to hear us and see us using Zoom. So if you are on a desktop computer, your audio controls will be on your bottom left-hand side of the screen, and your viewing controls will be on the top right. And then the communication controls, which I'll go over in a moment, are at the bottom. Similarly, if you are using a mobile device, audio controls are up top. So you can select, which speaker you want to use or how you'll hear us. Communication will be at the bottom. And then today we won't have chat enabled, but we do want to know if you have a question for us. So if you do have a question at any time during the presentation, you can use the Q&A button, which is at the bottom of your screen. And we will try to answer all of your questions, but if we don't get to all of your questions during the presentation, we'll be sure to follow up via email afterwards. And we do have a Q&A portion of the presentation at the end. Again, we will try to get to all of your questions. We'll answer these live. If there might be a question we can answer pretty easily via chat, we will do that as well. All right, so let's kick it off. So we're here to learn about the keys to home buying success, demystifying the process of buying and financing a home. So we have several panelists here with us today, but first I'll hand it over to Jeff Hudson, our AVP of Real Estate Sales, to tell everyone a little bit about himself.
Thanks, Tatiana, and good afternoon, everybody. I'm really pleased that you're able to join us, and I hope that you're able to get some very useful information out of our session today. Just wanted to kind of give an introduction for those of you who might not be familiar with San Francisco Fire Credit Union. We were founded in 1951 by firefighters, for firefighters. However, in that period of time, the credit union has grown over the years. And now we're focused not only on the needs of firefighters, but that of the entire community. But we also realize that, there's a lot of home lenders out there, and it can sometimes seem bewildering to understand the difference between one lender and another, other than who's offering the lowest interest rate. So just a little bit about San Francisco Fire Credit Union. It's helpful to remember that we're local, and the entire team that works on your loan is local. And that means we understand many of the unique aspects associated with owning a home in the Bay Area. And as a credit union, we strive to deliver an experience far in excess of what you might find at other lenders. And our goal for today is just to go ahead and provide you with as much key information as we can to make the home purchasing process helpful for you, and you're as prepared as possible to embark on this journey. And then if you wouldn't mind changing the slide for me, Tatiana. And just a little bit of information kind of as a primer is the information on this slide shows what has happened to the real estate market and the median home price for single family residences and condos in San Francisco over the past year. Now, there's never going to be any one factor that drives home prices, but we have been in a rising interest rate environment. And so that, among other factors, has resulted in a reduction in the median sales price of a single family home since last July. What you'll also see, though, is that condos, TICs, and co-ops have actually held fairly steady since July of 2021. So just a little bit of insight as to what's been happening with the home values in the real estate market. And with that, I'd like to step aside and introduce our host for the afternoon is Nimish Sheth.
Oh, Nimish, you're on mute still. There you go.
How are we doing? Nice to meet everybody today. Just wanted to introduce myself. I've actually been working in the mortgage industry for about 17 years. I've worked from the large institutions to the small institutions. That's where I'm at here in San Francisco Fire Credit Union as of today. we are here to basically answer potentially, hopefully, any of your future questions, but here to help you out and hopefully get you into a new home.
Awesome. Thanks, Nimish. And of course, we have a guest realtor with us today, Rohit, who we will introduce a little bit later in the presentation. So let's jump into the webinar, but quickly before we do that, we want to learn a little bit about those of you who are with us today. So we have a survey question we would like you to answer. So the question is, when are you looking to get into your new home? So I'm going to go ahead and launch this poll question. If you can go ahead and select your answer. Okay. Looking for a couple more answers. Okay. Well, it looks like the majority of folks here are looking for a home within the next year or so. So that's pretty good because that gives you enough time to prepare. So, and we're going to learn a lot about that today. So first of all, Nimish, if you can tell us, you know, maybe what are some trends you're seeing in the market right now? Like, why are people looking to buy at the moment?
Sure, no problem. First off, security, you know, not having to rent from a landlord and owning your own space and being your own boss, a huge deal. A place to, of course, grow your family, pets included. More space, you know, you can work from home these days. So, you know, you have that ability to have a lot more space, separate office, the whole nine. Big one here is equity, a physical asset. You're paying your mortgage and not paying rent. So you actually get to potentially, you know, gain equity. And of course, you're paying down equity, both of which are win-win. And compared to paying rent, where you're just simply never going to see that money back. So you're definitely building wealth in two routes in that sense. Market rates are very low. Today is a little bit confusing. People think that rates have gone up and they're kind of high, but they're really not in regards to what the history of mortgage rates have been over 30, 40 years. Rates at 30-year fixed, for example, at 5% today is still significantly low. And to borrow $1 million at 5% is actually very good. It allows you to own a home and still be able to not have to deal with paying the rent and gain that equity. In addition, there's a possible tax deduction as well, which you can, you know, write off taxes, the insurance potentially, the interest that you also pay. These are all different tax write-offs, which you will eventually, you know, want to consult with your accountant or tax advisor. But again, these are all benefits in which you will gain some benefits from owning a home.
Awesome. Sounds great. Thank you. All right. So getting ready to you know, get a home loan, what are some of the things that you look at as a mortgage loan officer when someone is applying?
Yep. Credit. First thing is credit, of course. You know, you want to have decent credit. We tend to look at anything beyond 640 and above as decent credit. And basically, you want to know where you stand in regards to your credit history. We generally, banks, mortgage companies will tend to look at least 3 trade lines, which simply means either a, you know, a car loan or a credit card, or in 3 of those in combination, more or less, to be what is efficient credit in this sense, they say. But that is a key factor in at least knowing where you stand and taking advantage of getting a, you know, the best interest rate possible. Of course, equity. So now down payment, loan to value. So how much can you pay down on the purchase? The minimum we require over here as Fiscal Fire is 5%. And then anything beyond that, of course. And knowing that where you stand in regards to your assets, cash, liquid dollars, and if you potentially you can get some gift funds as well, which would come from family. These are all different routes, but doing your diligence and finding out how much you can actually realistically put down towards the home purchase. And of course, the ability to pay. That is the income that you qualify for, you have, and in regards to the debt that you are going to pay going forward. So that will include everything from what is on your credit report, so all your credit card payments, car loan, etc. In addition to now your new mortgage payment, taxes, insurance, and potentially mortgage insurance if you would not be putting 20% down, and potentially homeowners association fees, which would be if you have a condo or you're in a community that's quote unquote a gated community, etc. All of that combined will be what we will look at as your debt, and will based on your income will qualify you that based on that at a percentage generally around 43%, and give or take a percent here and there to see what numbers look like in regards to your loan, in regards to your income.
That's great. And it sounds like ultimately we want to make sure that the borrower is able to afford the payment that they might have, right?
Yep, of course.
That's great. All right. So in addition to preparing for the loan, like maybe at a higher level, like what are some of the steps people should anticipate when they're getting ready to, buy a home or start looking for a home?
So of course, getting a pre-approval, right? So I would always recommend first going to the bank or your local loan officer and finding out what you potentially could qualify for in regards to what is your down payment, what would the closing costs be in purchasing this home, and the range of what you're looking for in regards to your mindset in your area. If you potentially need to have reserves, which simply means cash aside from the down payment and the closing costs, and those reserves can also come from retirement, but just knowing what you have on top of that, if it's required, minimum 2 months, sometimes more. But all of that we can discuss later on, but still knowing your dollars, basically. Knowing about large deposits, if you've actually recently had a large deposit or you're going to get a large deposit, know that we're going to ask about it and we're going to need to have the source for it. All of that will entail us getting you pre-approved. We're going to ask for your income. We're going to have you put an application in. We're going to pull your credit as well. And based on your income, assets, credit, we will then tell you what you should look for, what you can qualify for, and what you feel comfortable with, of course, but what the numbers are based on a pre-approval per standards. After that, if you have not already chosen a realtor or have not been working with a realtor, that's when you would take that pre-approval and go to a realtor and show them that, okay, you have at least been pre-qualified, pre-approved via the bank, and they will then start showing you homes.
Perfect. Yeah, and I think sometimes people find a realtor first, which we'll hear a little bit about later, and they typically will advise, you should get a pre-approval if you haven't yet. So some people do those steps in different orders, but yeah, both are important.
Yep.
All right. Can you tell us, Nimish, a little bit about what mortgage insurance is? We hear this question a lot from potential borrowers. It can sound like, something that might be scary or like a penalty, but can you kind of talk through that a little bit for us?
Sure, of course. Yes, it is actually not a penalty whatsoever. Mortgage insurance is actually a benefit if you just don't have enough down payment. So for example, in our world, we require 20% down payment to buy a home to avoid what is mortgage insurance. But unfortunately, people don't always have that. So if you don't have that, you still are able to purchase and you will have to pay mortgage insurance. So it varies from 5% to 10% to 15 to 20 up to 20 is when you would have to pay a mortgage insurance premium. And that dollar figure will vary based on that down payment. So the more you put down, the less the payment will be. Here at San Francisco Fire Credit, we also actually allow jumbo loans as long as you qualify. So jumbo meaning, anything above basically $1 million loan amount. And if you qualify based on the reserves and income and assets, of course, we will be able to also then give you a loan based on a 5 to 10 to 15% down using that mortgage insurance if you qualify. Again, those details we can discuss later when you come to that moment.
Perfect. Thank you. All right. And then, so it sounds like, we have a lot of tools or ideas of what to get ready to get pre-approved. But once you are pre-approved, there are some things you shouldn't do. Can you go over what those are?
Yeah, don't buy a new car randomly unless you are already in the works of buying such. Just make sure that when you are looking to buy a home and you're getting your credit pulled and mortgage lenders are working with you for pre-approvals, etc. Just don't go out there and just get your credit pulled for any purpose other than the mortgage unless you need to. And I will always recommend consulting with your loan officer to discuss those. And then if they tell you, yes, you can qualify based on that, if you're looking for a new car, for example, you may be able to still qualify. So consult with your loan officer, but just don't go buy a new car if not needed, and or you may not qualify because it can interrupt what are the numbers for qualifying for this to buy this new home. So don't go get a credit report pulled for buying furniture or Macy's new credit card, or don't co-sign for an individual. There's also in the situations where what can affect you here is like late payments on credit. So if you are looking to buy a new home, just be on top of your credit. Make sure you don't have anything late, 30 days, 60-day late payments on a credit card or any form of payment that is on credit. Don't change jobs in the middle of the process, most definitely, because if you do, then all that will have to be acknowledged. Basically, when you are looking to buy a new home, just don't try to borrow other funds and or interrupt your situation of what is the day-to-day job, moving monies around, so that we understand what you're doing and where you qualify for and take you from there.
Yeah, so it kind of sounds like what's happening is the pre-approval, I believe, lasts for 90 days. Is that correct?
Correct. Yep.
Yeah, so we're essentially taking a snapshot of your financial situation, and we don't want it to change very much during that 90 days because we want you to be approved at the end of, once you've found a home and, we go through the actual home loan process.
Yep.
Is that
and
correct?
that pre-approval, that 90 days is because the credit report will expire. So we'll
okay.
And we'll have to repull it. So yeah.
Awesome. All right. Well, once we're pre-approved, we found a home, and we're looking at some of our loan options. What are some options that are available to borrowers?
Well, there's many options actually, right? We have fixed mortgages from adjustable rate mortgages. The standard, everybody likes to look for that 30-year fixed mortgage, and they all vary. It depends on what you're looking for, where you qualify for, and how aggressive you want to be on your payments and pay your home off. But 30-year we have, 20-year we have, 15-year we have, all of which are fixed rate loans. Of course, the 30-year will have the smallest payment, but the higher rate. The 20-year, a little bit better of the rate, higher payment, of course, and a 15-year, which will be the best rate in regards to the fixed loan rates. We also then have adjustable rate mortgages, anywhere from a 3-year to a 5-year to a 7 and a 10, all of which means basically that the rate is fixed for 3, 5, 7, or 10 years, and then it will adjust accordingly to the market. It will have a cap of 6% on top of what is the going rate at the time that you get your mortgage. And so, for example, if it's a 4% 10-year fix, the maximum the rate would ever be for the life of the loan would be 10%. And these rates are also all based on a 30-year amortization, which means that your payment is calculated on 30 years for whatever the rate is for that term, 3-year, 7-year, 5-year, 10-year adjustable, and then it'll adjust accordingly. Many times people do refinance after the fact, though, so you never have to really panic about what is going on in the market in the interest rates. If the rates are crazy, then maybe you don't refinance, maybe you do, it depends. But if the rates go down, you don't have to refinance and you can play the market and have a lower interest rate.
Awesome. Okay, great. Well, we're going over a lot of information here at this webinar today, and this is recorded so you can revisit or watch some of our other webinars on YouTube, but we do have a resource section on our website that I just wanted to share with everyone. So we have calculators, we have, an overview of different types of loans. So that is there, and we'll include that in like a follow-up email that everyone will get. But of course, you can reach out to Nimish, Rohit, or Jeff if you have other questions as well. That being said, we want to move into the next part of our webinar, and we have another survey question for everyone. So this question that we will be asking is, how are you searching for a home? So I just launched the survey, so if you could input, what are some of the sites you're using to look at listings? All right, I have a couple responses. Okay. Okay, I'll go ahead and launch and share the results here. So it looks like the popular choices are Redfin and Realtor.com. All right, well, thank you for submitting your answers. So next up, we're going to meet our partner for today's webinar, Rohit Sika. Can you tell us a little bit about yourself?
Hi, good afternoon, everybody. I'm Rohit Sika. I'm with Remax Active Realty. I'm a broker. I've been doing real estate for over 20 years now here in the Bay Area. I primarily do it in the East Bay, but I go all over. I look forward to listening to your questions and trying to answer as best as possible. So thank you for having me today.
All right, thanks so much for being here. So from your perspective, we're talking about how to succeed in the home buying game right now. And so in your opinion, what are some things to consider, outside of the loan side to get started? What should you think about when you're getting ready to look for a home?
I think understand your environment, understand your area. Think about your commute to work, think about where you want to put your kids in school, other factors, maybe the local shopping center, stuff like that. You want to understand where you want to go. And then from there, understand what your budget's going to be. So that means getting the pre-approval, looking at what the monthly payment will be, and then determining how much you can put down and understanding what the interest rate along with the monthly payment will help you obtain a new home.
Perfect. Yeah, it's very important to be near a target, I think, when you're looking for a new home. But did you want to share a little bit about maybe the process of selecting an agent? How important is that to the process?
Yes. So when selecting an agent, again, it's important to establish a good relationship. You want somebody who's going to work for you, right? It's not. You need somebody with experience, and you want somebody who's going to help you negotiate your deal. Today's market, as you notice the trends, they've kind of slowed down. And today's market, it's not like it was 6 months ago where, okay, yeah, I just got to write an offer. I have to give into what the seller wants. Today, you as a buyer have a little bit more power on your side. So if there's something listed for $1 million, you might not have to pay listing price. Your agent should be able to negotiate something maybe lower and maybe sweeten the deal, helping you get some repairs or helping you get some closing costs. So you want to find an agent who's established, who understands what they're doing, understands the neighborhood and the market, and understands your needs. If you find someone like that, you're going to be much more happier, and the process should be less stressful, because it's a very emotional process when buying real estate. So that's my advice to you.
Absolutely. Awesome. All right. Well, I think we all watch a lot of HGTV, and we've seen that, a lot of folks have a checklist for, things that they need in their dream home. But, sometimes we can't find all of those things, but sometimes we can. So what are some things to consider when you're thinking about like what should be on your list for a dream home?
Well, first of all, for couples, okay, when you're buying a house, you're buying it together. Okay. So one, if the wife likes the house and the husband doesn't, don't buy it. If the husband doesn't like it and well, sorry, if the wife likes and I'm confusing myself, vice versa. If none of you two like it, then don't buy it. But if you both like it, buy it together, because if one of the people in the marriage is not happy, it could lead to problems. Hey, you forced me to buy this house. I didn't want that. So both of you should agree on a home that you like. Then think of other factors as to what your work commute will be, how long it would take. A lot of people, looking at affordability, especially in the Bay Area, they drifted out towards Tracy, Sacramento. My advice, if you're working from home, then great. Maybe you could find something that's affordable. If you have to commute, my advice is to find at best 15 to 20 minutes, max about 40 minutes away from where you work. That way, with traffic starting to build back up again, you're not stressed out, spending 2-3 hours on the road and coming home after a long day. You want to have that perfect harmony to, of course, come home, be with your kids, be with your family, relax, and have a better life. And also, again, look into conveniences of schools, what's going to be best for your kids. Right, we all have to pick up and drop kids. I know me and Tatiana are talking about schools opening again. We got to drop our kids in the morning. Some of us have 2 kids. If you have a kid in kindergarten and you have a kid in 2nd grade, they're going to have 2 different school times. So understand those timings when finding a house so you can commute back and forth. Again, looking into other amenities in life, your shopping centers, going to the gym, just finding the right balance. That's what a lot of millennials in the market are looking for. What's a good walk score? How easy it is for me to go to a shopping center. And again, it depends on you as a buyer. Some people don't even want to be around people. I'd rather be secluded and have my house out in the boonies somewhere so I don't have neighbors, or I want to be in the city and I just want to walk to the grocery store, pick up my stuff and walk back. These are things you need to decide together, especially couples.
That's great because it goes beyond just, I want 2 bedrooms, 2 bathrooms. I want, this type of yard. So those are great, like environmental factors to consider. So that's
that
terrific.
also do factor those in, because you could have a family of 4, and if you have 1 bathroom, that could be an issue. So again, look into the bedrooms. Is a couple with 2 kids, then you need a 3-bedroom with 2 baths.
Yeah, I don't know how the Brady Bunch did it.
Oh,
with the 2 bathrooms. All right. Well, when you find your home, whether you're working with an agent yet or not, what are some things you should do, when you found that potential dream home?
Well, when you find a home, yes, you do. My advice is do find an agent. Again, do find an agent who's going to work for you. Our job as an agent is to understand, one, where you're buying, what you're buying, so that way we can help you understand how to negotiate for the home. So in today's market, when we put an offer, most agents will do comparables, meaning they will look at what's likewise that's sold, kind of tell you what the trends are in the neighborhood. So if the prices are going up, they should be able to send you 5, 6, between 3 and 6 properties that, hey, it looks like their prices have shot up in the past few months, or in this kind of market, hey, it looks like it's slowing down. It's been on the market for a while. I see these homes sitting for 50 days and the price looks like it's reduced maybe 20, 30,000 in the area. That way you understand what's going on. You can make an educated offer on what you and your spouse would like to do. The other thing, once you guys have decided and ready to make an offer, start reviewing initial disclosures and understand what's going on with the home. So that way, hey, this could be a little bit costly. There's about 20K in termite that's been disclosed to us. Do we have that type of funds, or is that something we can negotiate? Once you understand that, have the agent prepare the offer based on what you've been educated on, and then eventually they can send it in and see what we could try and negotiate.
Yeah, and in the last webinar, we had a seller's agent on, and he was telling us that in the current market, since the market has slowed and it's changing a little bit, maybe 6 months to a year ago, buyers might not have been able to ask for repairs to be made, but it sounds like that's changing. Is that similar in your experience?
It's slowly starting to change.
Yeah.
Even I think we're starting to see some closing costs being put in.
Nice.
So I think it's to your advantage. Yeah, the rates could be a little bit higher, but this is a good market where you can start taking advantage and helping yourself get things you couldn't get about 6 to 8 months ago.
Yeah, awesome. All right. Well, when your offer is accepted, what are some things that might take place that potential buyers should know about?
So the key thing is time is of the essence. Okay. Once you get your offer accepted, one, you need to talk to someone like Nimish, who's in your local market. He's a local loan agent. Let him know that, hey, we got our offer accepted. Once he understands, now we got to follow the timeline. Most standard offers are about 30-day closings, and they have standard contingencies of 17 days for inspections, 17 days for appraisals, and 21 days for a loan contingency. These are key factors that you have to meet, especially on the loan side, where sometimes the appraisals could be busy and they could take more than 17 days. You need to work hand in hand with your loan officer. With the loan contingency, you have to factor in what he needs, right? So apart from your income, your bank statements, there could be questions on your credit. You have to get all this information to your local lender, someone like Nimish, ASAP, so that way they can meet all the loan criteria and try to get this closed in 30 days.
Yeah, so it sounds like organization is key here.
Yes,
Yep.
yes.
Perfect. All right. Well, can you talk a little bit about, what it looks like when you're finalizing your journey? So your house, everything has closed. What are some things home buyers should know?
Well, once you are in the process of getting a home, fine, you meet your loan standards and they're ready. What happens is they'll call it docs. So all the loans criteria has been checked off. Lender says, congratulations, you're ready to close. They send the file to the title company. At the title company, they'll prepare your closing documents. Over there, you'll sign off all the documents, and then eventually your loan will fund and then record. The day you record is the day you've closed, and that's final. And then usually before you close, you want to do a verification of property, go over one more time of how the condition of the property, sign it off, and voila. Once you record, you have your keys.
Awesome. That's very exciting. Okay. Well, now we're going to head into the Q&A portion of the webinar. So if anyone has any questions, please feel free to use the Q&A button at the bottom of your screen. But we do have some questions that have rolled over from previous webinars or questions that we've received from members. So I'll go ahead and ask those now. The first one we have here is, how soon can I move in after I buy a house? So Rohit, I think that's a good question for you. Yeah,
so again, the standard contracts are about 30 days. It just depends on the loan type you have. But sometimes we've seen sellers requesting some rent back, saying that, hey, I need to find another place while we're selling ours. So they can request something for 30 days, up to 60 days. So if they've negotiated that, it could be, then, it's called, the seller will pay some rent back. So they'll negotiate what your current buyer's principal mortgage is. And if they do that, then depending on a 30 days, 60 days, you'll get your house after they told you they're ready to move out.
That's great. So we have a question that just came in from the attendees. Veer asks, says, this is for Nimish. Can a buyer start off with adjustable loan and then switch to 15 or 20-year conventional? And then Nimish, you're on mute, so you might want to unmute yourself.
Yes, of course you can. You would have
Great.
to, of course, refinance. So if you have an adjustable rate and you want to switch to a 15, 20 and or 30, you can always do so. It would just be, we would just simply have to do a rate and term refinance.
Okay. Perfect. All right. Well, I think this is another good question for you, Nimish. Will my pre-approval be applicable in other states?
Unfortunately not. We only lend in the state of California.
Yeah, that's great to know, because while your membership is applicable in other states, you can be a member of the credit union and then move and still continue to use your, ATM card, et cetera. But yeah, that's a good point that we only lend in California. The next question we have here is, with the rising rate of environment, does SFI or credit union offer competitive rates? So Nimish, did you want to speak to that, or Jeff?
Sure. Yeah, we most definitely do. Being credit union, we're actually very competitive in the market with regards to our interest rates. Maybe if Jeff, you want to chime in a little on it, but yes, we are most definitely very competitive and try to be in the top for mortgage rates.
I would agree with that, with the way Nimish characterizes that. We try very hard to offer the most competitive pricing to our members, and we can't always be the lowest in the market, but we are generally very competitive.
Yeah. Yeah, and you also know that you're working with a person generally who's helping, guide you through the process and take a look at your financial situation. So that's also very helpful. All right, the next question we have here is, when reviewing disclosures, what might be a red flag? And Rohit, I know you talked a little bit about disclosures earlier. Do you want to take that one?
Yeah, sure. So with disclosures, I don't know if I could say red flag. I would say ask a lot of questions. So when you're working with an agent, have them check with the other agent what else is going on. Sometimes sellers could forget certain things happened. Like there was a leak in the house 5 years ago. How did it get fixed? If they had receipts, look into a lot of people. The main concerns people have, from my experience, are like, has anybody died in the house? And usually after 3 years, they have to or don't have to disclose it. Again, any major repairs that were done. Some people want to know how if there's any foundation issues for older homes or again, pipe leaks or any roof issues. But again, these tie in to the next question, which are inspections. I always advise buyers to do a lot of due diligence, ask as many questions as possible. If you have to, go to the city, check like maybe the square footage of homes, check if there was any permits done that were if anything was extended in the past. Again, get inspections so that you know what's going on with the bones of the house, whether how old the roof is, and maybe how long it's going to take, how long the economic life of the roof is. See if there's any termite issues, and then again, just seeing the overall condition of the home. Get these inspections. I know a lot of times sellers offer them, but usually as a buyer, it's still your job to inspect yourself and again, ask as many questions as possible. And that's what a realtor should be there for, to help you and guide you through this process.
Awesome. That's super important. And in my own experience, I was really pleasantly surprised that my inspection report that I did receive was so detailed. And there were findings that weren't even very urgent. And my agent helped me go through and identify what was, urgent or things to ask questions about. So yeah, it's a really insightful process. So we have two questions that just came in. So the first question here is a question for Rohit. Do you feel that new agents should be given opportunity to be your listing or buyer agent? Or do you strongly feel that a good pick is always an experienced agent?
You know what? You should give everybody a shot. A lot of sellers and buyers today interview several agents. So I think it's really based on how you connect. If you feel like you connect great with an experienced agent, then use them. Sometimes an experienced agent could come off arrogant to you, but a new agent is ready and willing to work for you because they really want to work hard for their commission. And so they could have more time for you, and they'll be willing to answer each and every question, where sometimes even an experienced agent, yeah, they know what they're doing, but then they could be bogged down by several transactions. But as long as an agent is able and willing to give you all the time and help educate you through the whole process, find someone who's going to work for you.
Yeah, that's great advice. So we have another question here. In 2021, my husband received 9 W-2s, and I've been at my job for 10 years. Do you think it's best to wait 2 years later to buy a home or get a loan? So I think the question is around all of the W-2s in 2021, and maybe, is that going to complicate the loan process, or should they wait until maybe he has fewer W-2s and like a single form of income?
Sure. I mean, 9 W-2 is quite a bit. It's a lot of jobs there. I mean, if at the moment they are permanently working somewhere and they're going to continue to work, have an offer letter, because I assume 9 W-2s in 1 year, which basically means like every month a new job, more or less. It doesn't have to hold you back from trying to apply. But yeah, we would the 9 W-2s, we would only be able to use basically what is the current job. And so
okay.
probably look at the offer. We want to look at the offer letter for sure, because I assume they're just fairly new at the new job. I mean, at this point in this year, yeah, we're already 8-9 months in. So maybe maybe we're already 1 year in. So yeah, look at the offer letter, look at the pay stubs, and take it from there. But it does not have to hold you back from applying and or looking for a home today. No.
Okay.
Tatiana, can I add to that?
Absolutely.
So, it's a very good question, and I agree with Nimish. The answer is, in this particular situation, is it depends. So we're all 9 W-2s in the same profession, and is that person steady in the position that they're in now? Do we need that income to qualify? So there's a lot of what ifs that need to be addressed, but it sure doesn't rule anything out whatsoever. But it's a good conversation to have with your loan officer so they can address the question.
Yeah, that's a great point, because there's a lot of people out there who are working in the gig economy or are contractors for different companies. So to Jeff's point, I think it's really great to just have that conversation one-on-one, because everyone's situation is a little bit different. So that's great. It's a great question. We have another question that came in. So this is a question for Nimish. At what % of the loan does the buyer not have to pay PMI? They say that they know 20% is standard.
And that is exactly what it is. So yeah, 20% down, and you do not have to pay PMI.
Okay, so once you've paid, I think that you said earlier, the number is once you get the loan down to, I think, 78%. Is that correct?
Well, yes, 78 would be if you are paying PMI and you're looking to get rid of it.
Okay.
You would have to get to 78%, where by generally default, it will disappear. There might be an instance where you may have to reach out, or even potentially sometimes get an appraisal. But the rule of the law is 78% is when it simply will disappear. Yeah.
Okay. Excellent. Yeah. So it sounds like 20% is the magic number to not have to pay
Yeah,
PMI.
20% and no PMI. Yep.
Awesome. Great. Okay, well, I think that concludes the Q&A portion of the webinar. I don't see any other questions coming in, but if you do have any other questions for our team, you can go ahead and give us a call or email us. We'll be sending a follow-up email after this with an email address you can use, and we're happy to help answer any of the questions you have. But yeah, I just want to thank everyone for attending this lunchtime webinar today. We're experimenting with this new time. And I'd like to thank our panelists today. So Nimish, Rohit, and Jeff for joining us and sharing your wisdom. I think we learned a lot about, some of the keys to success to buying a home. A lot of them are around organization. So having your documents ready, getting pre-approved, working with an expert when it comes to looking for homes in your area. So thank you again, everyone, for being here. And another reminder that we will be doing an opportunity drawing for a $50 Visa gift card after the webinar. So keep your eye out for an email with the winner's name. So thank you again and have a great day, everyone.
Okay, thank you.
Thank you all.